Hello and welcome back to our final video dealing with Chapter 14. Describe the form and content of corporate income statements. So what we have here on the screen obviously is the income statement. That should be evident by the fact that it says income statement within the header, as well as when you look at it, it says sales revenue. So what we have here is a corporate income statement. Okay, it's slightly different from the income statements that we looked at in Accounting 1, right? Because Accounting 1, we dealt with sole proprietorships, right? We really didn't even talk about taxes, right? Why? Well, because sole proprietorships, the income from the sole proprietorship flows to the owner, and the owner pays the taxes. Okay. Now that we have a corporation, and think back to our second meeting where we really got, or wait, was our second? Well, think back to, I think it was chapter 13 actually. Sorry. When we started talking about corporations, and we said we went through a list of all the characteristics of a corporation, and one of them was that they are a legal entity in the sense of the law. A corporation is a legal entity, meaning it has to pay taxes, right? So we looked at some of the advantages and disadvantages of corporations. And the reason why this income statement is a little different is because notice that we have two new lines here, right? Income before income taxes. We have the income tax expense, and then we have our net income. Okay, so we're adding to the income statement, and remember, the whole purpose of the income statement is to provide investors with information, right? So the fact that we have an income tax expense says, or basically informs the investor, hey, here's what we had to pay in income tax based on our sales revenue, based off of our earnings. Okay, so there's really not much difference, right? If we get to the first couple lines, we start off with sales revenue. Okay, we've seen that before. Cost of goods sold, definitely saw that before. We end up with our gross profit. Okay, cool. We know what gross profit is, right? Then we look into our operating expenses. Now, this differs from what we've seen before, right? Before, we actually listed out every single operating expense that we had, right? We had interest expense, we had salaries and wages expense, utilities expense, and all the other plethora of expenses that we've talked about. So when we're looking at it from a corporate standpoint, it's okay if we go ahead and say, you know what, here's our operating expenses. They total $50,000. Now, here's where we kind of get we get some new information and some new insight. Notice notice the line after the operating expenses. Once we subtract out operating expenses from our gross profit, we have income from operations. That's the income that we have generated, or that a company has generated based on their core activity, right? McDonald's, what's their core activity? Sell hamburgers. Nike, what's their core activity? Sell shoes, right? So we could see that income from operations is $150,000, right? That helps us out to make a decision, okay? Is their income from operations adequate? I don't know, right? We really can't tell. What do we need something to compare it to, right? Just solely by itself, income from operations is positive. It's $150,000, so that's a good thing, right? They're making money on their core activity. And then we have this idea of other gains, other revenues, other expenses, and other losses, right? Now, we looked at this already, right? I want you to think back to when we were dealing with depreciation, right? We went through all the calculations of depreciation, the straight line, the double declining, the unit method. And then we had some accounting practices that we had to learn in dealing with disposing of plant assets, right? We would either have a gain on that, we would have a loss on that. And that's what we're talking about here. That's part of those other revenues and gains and other expenses and losses, okay? Once you get into intermediate accounting, right? We're not there yet, but the idea that corporations actually invest money into other corporations, okay? It's a whole thing on how do we report, how much do we own, but from one sense, since the corporation is a legal entity, think about yourself, right? Or normal people. Well, as normal can get, I guess. But people, right? What do you do if you have more money, right? Well, you invest it, hopefully, right? You save it for retirement, or you save it to buy a house, or maybe you're saving up for a car, right? So what do you do with that money, right? Well, you can either save it or you can invest it. Companies do the same thing. Corporations do the same thing. If they have idle cash sitting around, let's invest it, right? Let's invest it in the stock market. Let's maybe purchase some bonds so we can gain or have a gain or make our money make our cash work for us so we could generate more revenue. Okay. That's what we're talking about, that other revenue and expenses. Those are revenue and expenses that a company generates that are not part of their core activity. Okay. So once we subtract out from our operating income any other, revenues and expenses or gains and losses, we end up with income before income taxes. So we have $156,000 of income it's not net income yet. It's just income. Okay, cool. Well, we have to pay taxes on that $156,000. So we calculate the tax at whatever our tax rate is. Then we subtract out the income tax expense to end up with net income. Okay? If I were you, I would study this, and it's very important. You got to study this. That's easier said than done. I get it. What are you studying? Number one, knowing what is on the income statement. Knowing what line comes before what, right? Sales revenue minus cost of goods sold gives us our gross profit. That should be a refresher. We subtract out our operating expenses. We end up with income from operations. Perfect. Once we have our income from operations, we can then tell the investor, hey, here's all the other revenue and expenses that we generated and some of the gains and losses that we have generated in addition to the other revenue and expenses, right? Remember, gains and losses are gains and losses result from selling assets that we, revenue producing assets that we have, disposing of PP&E. Those are our gains and losses, which we've already seen. Okay. We get this idea of now we can calculate the income before income tax, and then we can calculate our income tax expense. Okay. So the expectation is that you break this down on a note card, rote memorization, you know it. From a cognitive understanding point, well, the only really caveat we have is, we got two. The net income from operations, right? We're now communicating to our investors, hey, here's the income that we earn just from our core activity, right? And then we can get an idea of any other gains and losses or revenues and expenses that the company incurred that really weren't part of their core operations, okay? And then obviously the income taxes. I'm really not going to do an example of this. The reason why, I think it's very self-explanatory. As long as you have this slide in front of you, or you copy this down, put it in your notes, put it on a note card, study it, learn it, memorize it, you'll be fine. Okay? So tune back in for our, actually that's it for chapter 14. I'm going to, don't forget Monday, we have our assigned times to meet on Tuesday evening. So please be aware of those and go from there. So if you have any questions in the meantime, I am only a text away. please feel free and shoot me a text or reach out to me, and we could talk one-on-one. We can use, Google Hangouts. We can use Blackboard Collaborate. I'm going to look into Zoom and seeing what Zoom does for us, if that'll work, how much it costs. So that might be an option. I'll let you know, once I do a little bit of research on it. So again, if you have any questions, you know where to find me. Or let me rephrase that, you know how to reach me. And hope everyone's safe and healthy and not going stir crazy. And we'll talk to you soon.